How to get term life insurance. We're all too used to hearing about rising prices. But there's one thing that now costs less than ever: good life insurance. Intrigued? Watch on. First we have the level term policy. This pays a one-off cash payment when you die. The amount is agreed when you take out the policy and does not change. An increasing term policy is also known as indexed insurance, and the amount paid out changes with inflation. Some policies of this type may have premiums that rise with inflation too, but some do not. Lastly, a decreasing term policy pays out an amount on death that decreases through time, getting smaller as the policy progresses. A long-lived customer may even outlive the point where the policy pays anything at all. These policy types often form part of loan or mortgage deals. There are benefits to each type depending on the loan or mortgage it is being used to safeguard. Level term policies are most usually used with interest-only mortgages. This type of mortgage does not reduce the capital you borrowed with time, you only pay off the interest. When you die, the capital amount is paid off by the insurance policy payout. Whatever may happen with inflation, it does not change. Decreasing term policies are usually used with repayment mortgages. In this type of mortgage, the capital is paid off along with the interest, decreasing the amount you owe. This type of insurance has lower premiums than level term insurance. So far we have only discussed insurance for mortgages and loan payments. These are both useful, but there are other things you can do to ensure peace of mind. A typical average family, it is estimated, will need insurance for both parents worth at least £150,000 in insurance for each child, in addition to any death in service benefits you may expect. Taking the option of family income benefit, it's recommended that you should allow for an income of £20,000 to £25,000 a year for each child. There is another alternative form of life insurance. It pays out a guaranteed sum on the death of the policyholder and is known as whole of life. The terms for this type of insurance vary. You can also buy life insurance bundled with your pension fund. This gives you the opportunity of getting tax relief on the premiums you pay. A higher rate taxpayer can get £100 worth of life insurance for only £60, which makes this an attractive method to some. On the downside, higher administration costs for this type mean higher premiums overall, so basic tax rate payers may prefer to shop around and compare to make sure they get the best deal. Some couples take out a joint policy covering both at once, but it's better to take out individual insurance. The reason for this is that a joint policy pays out only once when the first partner dies, but individual policies pay out for each partner. We've given an overview of the different policies and what might be best for you here, but for more in-depth and up-to-the-minute advice, we recommend finding an internet insurance broker. Surf onto the net and into a great deal, and peace of mind for you and your family, hopefully for many years to come.